Hello, welcome to European Open Briefing for Thursday, January the 10th. I'm Rahul Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. So we're seeing a significant pullback in the US dollar. This comes after more Fed officials yesterday suggested that patience is needed before hiking rates further in 2019. We're seeing the dollar index currently slightly down at 95.21. Dollar yen, though, has slipped below the 108 level. The euro is benefiting from that dollar weakness. It's trading close to 3 months highs, and the dollar index is trading close to 3 months lows. But despite the more dovish Fed, as well as markets remaining optimistic that a trade deal between China and the US can be struck, we're seeing some easing of that risk appetite we saw over the past couple of days. Europe has just opened in negative territory. We saw small gains yesterday on Wall Street, and in Asia it was a mixed session. We did also have a Bank of Canada policy meeting yesterday. The loonie surged to a 5-week high, but has pulled back along with oil prices. So there's a bit of a profit taking in oil given the sharp gains recently. WTI down by around 1.5% this morning, although we did also see a bigger than expected increase in US distillate and gasoline stocks. So moving on now to the majors, we can see dollar yen currently around 107.85. We also, apart from all those Fed speakers yesterday, we did also have the FOMC minutes for the December meeting, where again some policymakers were actually not too sure about the December rate hike. They didn't agree with that, and also more officials urged for patience, the need for patience, and the need to wait before raising rates again. And today we're going to hear from Jerome Powell. He's going to be speaking at 17:45 GMT, as well as also from Fed Vice Chair Richard Clarida as well. Looking now to the euro, we can see the euro really rising significantly against the US dollar. It touched a 3 months high 1.1570 earlier today, as we're seeing receding expectations of Fed rate hikes in 2019, despite the fact that the Eurozone data itself remains very weak and rather worrying as well. Moving on to sterling, although UK data hasn't been quite so bad, we can see sterling failing to break past the 1.28 level. Prime Minister Theresa May suffered another defeat in Parliament yesterday, so now she has been forced by MPs to come up with a plan B in as little as 3 days if a Brexit deal is voted down. So this would means that she won't be able to delay a plan B until right before the exit date, in order to threaten MPs with the with the possibility of no deal Brexit and force her deal through. So this does tie her hand, and she's still struggling to win support of her own MPs as well as the DUP party. So the vote on January 15 will probably get voted down. Looking now at oil prices, we can see a slight pullback this morning. We had a smaller than expected drop in crude stocks and a large surge in distillate and gasoline stocks. Once again, raising fears of oversupply. But mainly it's down to profit taking, and markets are waiting for more clarity on the US and China trade talks, which concluded yesterday. But there's little has been said about it. Although it's clear that progress has been made, it's looking likely that more negotiations will be needed in order to have a major breakthrough. The loonie has also eased back from 5-week highs along with oil prices, but yesterday it got a major boost from the Bank of Canada, which, although they kept rates on hold, the statement said that rates will need to rise over time into neutral range, so we could still see further rate hikes by the Bank of Canada this year. And a quick look at the Aussie, it's holding close to yesterday's 3-week highs, so market sentiment overall does remain fairly positive, but we did have some negative data from Chinese producer prices for December, which fell much more than expected, pointing to again raising fears of a bigger slowdown in China. That's it from me. Thank you very much for watching, and have a great day.